Hi. Hi. This one's for you, Raw Dog. If you care to listen and then read and share your comments, perhaps. The reason being that recently I watched a couple of your videos, or maybe some more. I don't know how many, but you're pretty strong in your conviction at the moment that there would be heavy taxation on gold or that sort of a thing in reference to precious metal for wealth holdings. So check out FOFO's The Gold Must Flow. Quite instructive. A couple of highlights. One is about taxation and the idea that gold in private hands will be very important. Is very important. It's fundamental to a free gold type system. And it's more so the producers who will get the focus of government. So government will tax or will own, or they'll deal with on the supply side. They'll deal with the production side of gold. That's where they'll have their hands, their tentacles. On that idea, I'm curious what people who hold mining shares and that sort of a thing, what you think might be implications of that. If, theoretically that were to come to pass, how might that impact one's mining share values? Would the stock values be based on the total earnings of the company before taxes type of a thing, the value of what they produce, or will it be their earnings after taxes, which might be extremely low, the earnings, due to government, aka the collective, takes all that wealth for its hungry self. Another highlight is the idea of why the human superorganism is revaluing gold. It's a paradigm shift. It's a long, generational type stuff. Big time shift in economic practice through the monetary, based on the physical plane. Perhaps we could say mother is the mother necessity is the mother of invention. That type of idea. So they're revaluing it because for the purpose of gold flowing as a fertile member of the balance of trade. See, this is all about trade balances. And that's why I think it's really important that there are a lot of people now talking about how gold will be used in balance of trade. Well, how? Read this one, The Gold Must Flow. It's quite instructive, I find. So the balance of trade, the purpose of revaluing gold is so that it can flow along with all the other goods and services in payment for imports. So I think perhaps the last thing I'll say is about the spur and break effect, as FOFO calls it. So we're talking trade. We're talking international trade. So we have zones, right? We have a surplus zone, a deficit zone, right? The surplus zone would be producers who are producing and sending goods, pretty much, over to an importing zone, which would be importing those goods, and there would be usually a deficit. There's never any perfect trade balancing. It is balanced through whatever balancing mechanism. Currently it's debt, which is filling that hole, and that's so you have the surplus zone, who instead of accumulating debt would be accumulating gold through balancing the trade, and the deficit zone, instead of recycling debt monies back to the producing surplus zone, they'll be getting rid of their gold to they'll be exporting it along with whatever other goods and services they export in the balance of trade, right? It'll just be another good, but it'll be that focal point monetary good used for balancing trade. And the way the spur and break works is that eventually the surplus zone, and the surplus zone has what we could call a surplus or a saturation of gold. They have so much supply that the gold value in the deficit zone is higher than the gold value in those surplus zones, because due to supply demand, I would imagine, just like any other economic phenomenon perhaps. And so those surplus zones would then find more value from importing from that deficit zone, or those deficit zones, and that would spur those deficit zones to increase supply, to increase their manufacturing, to increase the goods and services that they export. And the surplus zones, in consuming more, would be producing less or saving less. Therefore, the trade balances would be less, if not negative, depending. And everything is different. And that doesn't even take into account all the... So some people might say, well, then isn't that the type of gold standard which is not free gold? Maybe it's, it could be hard money or whatever, and the medium of exchange and the store of value are the same thing. But no, because in this we haven't spoken about the currencies yet, because this is the physical plane. We're talking about the physical plane, and gold would also affect the monetary plane, but that's a different discussion apparently. I would agree. So I guess that's it. Raw dog, in terms of the taxation, FOFO does a nice little thought experiment. I mean, it's possible to try and shoot arguments and whatever, but the bottom line being that free gold being considered, taxation won't last. This idea of windfall profits taxation and stuff won't last. What do you think? See you guys later. Bye.